Ladies and gentlemen, welcome at the second Surety Week of ICISA. My name is Richard Wolf. I'm ICISA's Executive Director. I'm proud to say that we did this as a test last year. It attracted a lot of attention, and with more than 3,000 registrations for this Surety Week, it's attracted even more, which strengthens us in the idea that we are fulfilling a need in the market and that we are actually spreading the word on this really important product, which nobody seems to know, as you all know when you introduce yourself at a birthday party. Now, why are we doing this? That's exactly that. We want to spread the word. We want to show what kind of function surety has in our corporate environment of today and how important that is. On housekeeping, before I pass over to the moderator of this session, this week is going to be a 4-day week, Monday until Thursday. We will have 8 sessions on very varying topics. For instance, this afternoon, we've got a session on the value of surety, but also touch things like sustainability, digitization, inflation, which is a big topic at this moment. So I invite you to look, to learn, to listen, and to ask questions. And the questions, we will answer as many as possible at the end of each session. And you are in the excellent hands of Nils Hoppenworth, who you see on screen. Nils is head of surety of Germany, Austria, and Switzerland for Liberty. Much more importantly, because that's only his day job, he is also the chair of the Surety Committee of ICISA. And as such, he is moderating this inaugural panel for this Surety Week. And Nils, I invite you to take it away.
Thanks, Richard, for the introduction. And as you stated, I think like it's always difficult to explain what surety is. Even if you're at a birthday party or wherever you are traveling or like meeting people. And I think like that's bringing us brief to the introduction. As you know, terminology is always something for surety bonds. And I think like if you hear something about surety bonds, it's nothing else than bonds and guarantees, very similar to letter of credits, like as we are competing with banks. That's why it's so important to, you know, like, and very, you know, important for us to represent this week sureties as itself, as a provider, as a risk carrier and guarantor. And as we want to enlighten a lot more the perspectives of the product, that's why we invited the broker, a treasury department, as well as a restructuring consultant, and to look at the different challenges, experiences we take along, you know, rather in the past, further down to the future. And I think, you know, I was just like in our brief intro before we started the panel, I was just saying like I was skiing last week, and as you need to go through slalom and you need to go downhill, sometimes like you face sometimes the risks and sometimes bumpy roads as well, as like snow can be like very hard to fall on and you can slide down. And I think like partnering as well as reliance and resilience in general is so important across all the environment we are handing in. And I think like I would love to ask Jenna first to introduce herself, what's her perspective is on distribution of surety.
Sure. Hi, everybody. I'm Jenna Anderson. I sit within the Treasury and Trade Finance team at Yunex Traffic, based out of Germany, and with the primary responsibility, among other things, the strategic setup of our surety facilities, panels, and bond issuance. I can give just a brief background of why I'm here, and also, you know, so last year, we Unix carved out of the Siemens Group. And while we have been operationally a company for many decades, carving out of such a large multinational really had us start from scratch from a surety facility perspective, but also from a program structure. And during that process, we partnered closely with Marsh to help get this set up in quick order, but also strategically to align with our business going forward and help us grow. For we are in over 40 countries worldwide, so having the global perspective is absolutely necessary. No, but I'll flip it back to you, Nils, and of course we can get more into the details here.
Thanks, Jenna, for the intro. And now from another perspective, I think Peter Wolterman from PwC will introduce himself.
Yeah, Niels, thank you, and welcome everybody. My name is Peter Wolterman. I'm a partner within PwC, and I lead the Dutch restructuring team. I'm also the global leader, the global coordinator for our restructuring practices. My link to surety is that in many of the restructurings, surety, especially when we're talking about large building companies or shipbuilding companies, electrical engineering companies, this is where sureties come in. And I can elaborate on that on my experiences in these restructurings with regards to surety, as well as some of the solutions that we are also looking for.
Thanks, Peter. Last but not least, Phil, as a facilitator, as a broker and partner for partnering between clients as well as markets as us as sureties. So happy for you to introduce yourself, Phil.
Thank you, Nils, and thanks to ICISA for the opportunity to join today. As you say, surety is a liquidity enhancer. It's a business enabler. It provides optionality to clients who need to provide third-party guarantees for various reasons. Those are standard applications needed, performance sort of guarantees, but there's many tailored solutions and applications that are available to our mutual clients. As Marsh, we're often the eyes and ears for our clients and how the surety market can support and enable their business. As far as my background, I've been doing surety now for 25 years. The first 8 years was on the company side. I worked for one of the largest writers of surety before joining Marsh. My current role is overseeing our continental Europe surety operations. I'm based in Amsterdam. Again, very happy to be here and very happy for Jenna to join us. We've had a great run and a great process here as they spun off. We'll get into some details later, but I think it highlights a lot of the tangible attributes of the broker in that role, but also the partnership with the markets. And it was a complicated piece of work, but one that was very fulfilling in the end.
Thanks everybody for introducing. And I think, the different and diverse perspectives on working for surety, with surety, and around surety is so important for a transaction what Yunex was going through. And I think we'd love to hear from Phil and Jenna how they solve the problems. And I will give a slide overview of it, how a risk carrier has dealt with things on such a transition from being carved out and transitioned into a new group. Or even being independent. I think Peter fits very well in that, as as such situations can come across in an exit scenario, whether it is a carve out, whether it's a restructuring, or structuring something new. And I think we'd love to hear Phil and Jenna. Structuring something is not that easy, but how did you facilitate that?
Yeah, a lot of moving pieces, a lot of puzzle pieces to put together in something like that. And Nils, if you don't mind, I think I'll take just a few minutes and talk a bit more widely about the broker role, and then we'll narrow it down to the Yunex situation, or at least the broker role as we see it. Hopefully everybody agrees. We see ourselves as more than a transactional intermediary. In a lot of ways, we're a product ambassador. We're educating our corporate clients and our bank clients as to how and where surety can be utilized. We see ourselves as thought leaders. Globally, we play an active role in developing new applications and structures. We help in a lot of cases to help persuade beneficiaries, be their government regulatory agencies or be it another commercial counterparty, the benefits of accepting surety as a guarantee, as a third-party security. We see ourselves as problem solvers. We help to structure and facilitate these various solutions to enable our clients' businesses. We structure the facilities, bringing together surety capacity from highly qualified insurers. In some cases, we combine bank and surety capacity together to achieve the desired outcome. We have to consistently deliver value to our clients. It's always our clients whose interest, we're actively and vigorously representing, but also our market partners, our surety partners. They must feel that we are delivering value on their behalf. And we do that by identifying and developing these opportunities and doing a lot of homework and pre-qualifying these opportunities and these clients before we bring them to market. So we're sort of their first eyes and ears, if you think about it that way, into the clients. So how do we deliver value to both corporate clients and bank clients? It starts with education. We talk to our clients about what is currently available in terms of surety support, where that support can be had, and even more importantly, what's possible. We collectively, and Marsh plays a role in that, are developing new applications, new structures all the time. So just because something hasn't been done before doesn't mean it can't be done now. We spend a lot of time discussing the best structure, whether that's bilateral, whether it's syndications, whether it's bank fronting, or whether it's syndications between banks and surety. All of those are on the table. All of those are tools in the toolkit. We spend time talking about geographical sort of effectiveness and where we, as Marsh, can deliver, where our market partners can deliver, what sort of solutions are available. So we want to make sure that we are where our clients are and we're delivering where they need us to deliver. We, of course, have discussions around pricing. We educate them on how pricing is determined. We have deep benchmarking, so that comes into play as well. And we help these clients, our clients, identify ways to utilize surety. And then we pre-qualify them, as I said, working closely to gather and then professionally present all the relevant information that we know underwriters are going to want to understand. So my sort of rule of thumb is get something sort of 80% of the way there based on the underwriting package we're able to provide to you. That's, financial information and a lot of other projections and details around the obligations we're asking you to consider, sort of the business case for it. But there's a lot of work that goes into that, which Jenna can attest. Before it gets to the underwriter, we're doing a lot of pre-work there, and that's a very close relationship with the client to get us to that point. And then at the end of that, we're basically working with them to determine, once we've had that deep vetting process, is which markets are we going to with what information. And the market selection is an important part of that, to make sure that we're partnering our market, our client, with the right markets who we know can deliver. So that's sort of the 30,000 foot view. And again, we can talk with Jenna about how some of that came into play with the Yunex story.
Absolutely. Yeah, Phil, I think you make a very good point about, the right markets. And it's one of the first challenges that really came to mind that we went through as we raced towards closing earlier last year. But really, when a company in this experience of carving out of such a large multinational and becoming standalone, that, you have two very focused topics from a surety standpoint. And it's, of course, transfer of the legacy liability of the surety bonds, but also finding a facility and partner that we can be operational with day one of closing. I think we did issue bonds day one. And finding where those intersect. And that was a learning for us as Yunex. But as we went through this process with Marsh to really identify which markets matched with the future of Yunex and which ones that maybe on our legacy panel did not, and how we move forward and partner with them, and really relying on Marsh and you guys' market expertise, not only to help bring those international sureties to the table, but also presenting Yunex. We are a strong company, but at the time it's very sensitive on what information can and could be released prior to closing, of course, and working, strategizing with us, but also with the markets on, like you said, how we get 80% there, and really build out a program prior to us being standalone. And it was critical that we had this market insight, especially around some of the markets that viewed Yunex differently, for obvious reasons. We're a different company when standalone, considering who we were sold from Siemens. So the market appetite really was quite an influence in our process.
Absolutely. And I think, along the way, our goal is to always be your sort of trusted advisor, right? And for you to know that we're bringing credibility, we're bringing our experience. And in your case, and this is particularly important, because you truly are a global company, that it's not just the people you're dealing with here, it's the boots on the ground, right? It's that global view. It's people that know the markets, that can connect all the right people. So your people locally, you're talking to our people locally. And then even with the markets that we bring in, that they're also part of that equation, because that's when we collectively do our best work. And I think for you, having operations here in Europe, North America, Latin America, there was a lot of ground to cover, a lot of differences in how facilities are managed, what the guarantee needs are. As you said, we were balancing sort of the legacy relationships, but also looking to build upon those with some new relationships from the start. So we had that day one capacity. The last thing any of us could afford was to not be able to get a bond executed the day after closing. So
Yeah, and going back to our structure, indeed, being such spread apart across the world, it was the international, but also the local expertise is and still is very critical to Yunex. Strategically, we are absolutely centralized when it comes to the surety facilities and our view from a trade finance global perspective. But operationally, we're a very small team, and we rely on our local colleagues to work directly with the local broker to really make sure operational business runs. If having that close connection doesn't work very quickly when everything has to come through Germany, but you guys having the Marsh team work, but also represent the strategic view from the Yunex perspective locally has been critical, especially in countries, specifically in Latin America, that can be a bit more peculiar on these topics. Yeah, depending on the local regulations, of course.
absolutely. No, it is interesting because, when we in our surety markets have to also tailor our approach to the way clients are built internally, right? What is your DNA? How centralized or decentralized are you? We have clients that want everything to flow through. In your case, Germany. We have other clients that are very happy to have us work with sublimits and country limits and things like that in various geographies, just to make life easier because of time zones, because of the speed at which we have to move, especially if you're talking about bid and performance guarantees. We all need to be able to react very quickly. So we have to structure our programs to meet those clients' needs. And I think in this case, we did that. We heard what you wanted. We heard what you felt like you and your team needed, and then collectively brought those solutions with our chosen market partners. So that was, I think a very good outcome, and hopefully makes your life easier.
Absolutely. And I also don't want to discredit the strong partnership we have built with our surety partners.
Absolutely.
I think there's also sometimes this view of the broker coming in between the direct partnership with the sureties markets, and that has absolutely not been the case here. We feel that our panel that has been set up over the time of closing, we do have a strong relationship with them, and I think looking at Yunex, our future, our story, it will be critical. In 5 years from now, we may and plan to look different, and that's part of our growth in the future. And having the close direct partnership with our sureties, also surety panel, is going to be critical for that. But I just, from a facilitation standpoint, I think partnering with the various parties has been critical to facilitating that as well.
Absolutely.
As we got, and I think like that fits very well in your discussion. We got a question in the chat as well. Before I get something like as an answer on that question as well, what is the unique selling proposition of surety? And like just a very quick statement, one sentence. Phil and Jenna, and then Peter, and I will close, and I will round up a bit from a risk carrier perspective. As well as such like transactions like you had, if that is okay. Phil,
Sure.
if you like to start.
I'm not sure I can do it in one sentence, but I'll keep it very short. So it is a liquidity enhancer, right? I mean, it does give clients optionality when it comes to if they have to put up a third-party guarantee, and they can go to a letter of credit or bank guarantee, and those are wonderful instruments. But having the option to go to the insurance market and place those guarantees with a qualified insurer, highly rated insurer that should be very acceptable to that beneficiary, again, whether it's a government agency or a counterparty, just gives them more options and can help free up bank lines. That's the primary driver of why clients like using surety.
I'll jump in quickly. Specific to Yunex, we're in the traffic technology business, so we often we need to be responsive to our customer base, which around the globe is often infrastructure teams in local governments, local municipalities. So while there's financial advantages on the structuring side and capacity side, we also have to be very responsive to the needs of our customer base, and in particular jurisdictions, as we all know, surety is the number one choice and the only option, but it also gives us flexibility in certain countries and jurisdictions to offer or pick an instrument that works best for all parties. So it helps us really deliver to our customers as well.
Yeah, and maybe to add on that from my side, right? So in a restructuring, sureties are just as important as cash. And quite often interchangeable. I think, Philip, this is also what you said. Having in a restructuring sufficient flexibility, but also speed, because things need to change. You're in a transaction, basically, whether it's a carve out or restructuring, you come across a lot of the same things. Sureties are extremely important to be, that you can actually deal with them in a quick way as well.
So, from a risk perspective, I would like to add a couple of things as well. I think major issue is that we're as a surety, we are not relying only on the payout, the guaranteed amount. Sometimes a performance obligation behind that as well, in particular in a couple of markets, and that's very much dedicated to the US, where a performance obligation comes in. So those are some of our challenges being a multinational surety on that ground. That is certainly something which comes across a lot with Europeans going abroad into the Americas. With all the different challenges in the various markets, because even we're in the European Union, we have still 30 plus countries in different jurisdictions, case law, common law, and so forth. And as Jenna was saying earlier, I mean, that was, they are dealing predominantly with government-owned entities a lot, but sometimes private-owned companies have the challenges around the globe as well to accept counterparty risks as well, and so forth. I think that comes across with all the elements in transactions when you need to secure any obligations in a contract or in an agreement. And I think whether it is an agreement of a carve out, or whether it is a standstill agreement, or it is, something, where, a big project needs to be solved, Asia Pac, and, and I think it comes all down to the loyalty, to trust, as well as a dovetailed communication among all parties in it. And I think as I said in the intro earlier, it's terminology. And I think being in the ICISA surety committees, and having different the reinsurers, insurers, treasurers, brokers, consultants in those panel discussions, I think it comes really down to the right and distinctive terminology, or the same language. And as Phil was earlier saying, the different parties who are involved in such a transition, whether it is banks, trade finance, consultants, brokers, different colleagues even. So it comes from even from that perspective. where a language needs to be balanced. And I think facilitation in such a process is so important. And everybody has the same, same objective behind that, as like, of course, saving somehow liquidity, being flexible, but as well as, like performing the underlying contracts well. It's like we as a surety, we are just like jumping on a boat of two parties. It sounds very simple, but sailing the sea can be very, like rough in these days, certainly as well. So that's why I think it is critical to, and that's why I'm very glad to have Peter on the board, and I think like Phil from a different perspective, and Jenna, like just to what's your like current feeling about like having restructurings, or in like talking to your banks or talking to banks versus the sureties. We love the word and buzzword agile and flexibility, but how is that filled with life? And I think like maybe Peter, as restructuring became more a topic across this current macro environment, I would love to hear your thoughts on that one as well.
Yeah, that's fine, Nils. Thank you. And so I've been in restructuring for 20 years, so I've seen a couple of cycles. Well, if you look at the current state of the economy, we do get quite a lot of headwinds, and those headwinds are all familiar to you. You can talk about inflation, we can talk about raw material prices, energy, shortage of labor. So it's a quite very broad number of headwinds, and in addition, there's also a war ongoing. So it's very uncertain. We've seen across the globe, we've seen restructuring activities pick up, and that started somewhere September, October of last year. So actually during COVID, in many countries, restructuring activities was lower than pre-COVID, which sort of feels not really logical, but because of all the state support, restructuring activities went down, and they have picked up again. Not to the extent that it's at the pre-COVID level. And talking to the banks, we talk to a lot of banks, so especially the restructuring bankers, they also see the same uptick in activity, albeit that is not a huge wave yet. I do not have a crystal ball, so I'm not going to make any predictions. But I can say that we see some more positive things, the confidence of consumers or producers, but also some more challenges. So where this is exactly going, I don't know. But being prepared, I think, is always really, really important. Then maybe taking the step to dealing with sureties in a restructuring. And for me, sureties, but to some extent, you can also say the same thing about bank guarantees. This is a difficult party to deal with in any restructuring. And I hope I'm not making very full statements to any of you, but the difficulty is that we are dealing largely with unsecured, but also uncommitted providers of funding, and that funding is just as important as cash. Now, I understand that for sureties that are already in the company, it's not really uncommitted, right? Because, well, getting out is not that easy. But especially for the new funding of sureties, that is very important. It also depends in a restructuring when surety is actually at the table. What we typically see is that banks and bond providers, US bonds, for instance, are often earlier at the table than surety providers. And whether that's the right way or not, I don't know. I think it's very dependent on the case, on the specific case. But having all parties at the table at some point to get to a fully funded plan is very important. And I've seen examples. For instance, I've been involved in the Imtech files, or the Imtech restructuring, which was a very large international largely European, but international restructuring with a lot of bank guarantees and sureties as well, because they were electrical engineers, large projects, Berlin Airport being one of them. So these are typical large projects that were funded, not just cash, but also surety and also performance bonds being there, part of that, made it very difficult to find a restructuring. And in the end, the sureties were also included in the full restructuring. And actually, there was a certain way of commitment, but also security. So it's these are typical files whereby I believe that it's very important for surety to be at the table, because, like I said, you are a very relevant player. Maybe one more observation. I think Philip also mentioned this. This is about puzzle pieces. My experience is also that if you enter a company, they often know what the funding structure is. They know how much cash they have. But if we start asking questions about what guarantees have been provided to third parties, that is when it becomes difficult, because the visibility that a company has, in my experience, and please note, so I'm visiting companies that are in a more difficult phase, right? So I'm not saying that all companies are the same, but in my experience, and I would like to get Philip's view on this as well, but in my experience, the quality of that data, so to who has a surety been issued, how long does it take, what are the specific elements of that surety, are there any other thresholds in place that are relevant that we need to know of? How much headroom is still available under the uncommitted lines? This is something that we spend typically, or the company spends weeks on in order to get clear. And that makes it very difficult in any restructuring if your information base is that poor. Is that something you recognize as well, Philip?
Absolutely, Peter. And I see it also on the what I would call the prospecting side. You know, when we're talking to a large multinational client and saying, look, if you can give us a view into where and how you're using guarantees, whether it's surety, whether it's bank guarantees, letters of credit, cash deposits, prepayments, anything that would fall into the purview of potentially being a surety application or solution, it's amazing how difficult that can be for some organizations to gather that information. And it's a combination of, again, it goes back to that centralized and decentralized. You know, if it's a bit more decentralized organization, there can sometimes be a preference by the corporate to sort of push down the obtaining of guarantee lines, whether it's surety or banks, to sort of a local or regional level, wherever possible. And that's wonderful because it keeps it off sort of the parent company's, direct guarantee. But at the same time, it creates problems because they don't have as good a line of sight or control over those things. And again, at your part of the process, when working on a restructuring, all that I can imagine would be a very difficult situation in that sort of a circumstance to try and gather that information. So we are looked upon by our clients to try and, at least from the surety side of things, you know, if we have a global engagement, we are the keeper of that information. We help them report on that information, which can be really critical in a situation like yours, but also just for financial reporting. So it's a real issue. I don't know, Jenna, you probably have a view on this also at Yunex.
Absolutely. Yeah. Fortunately, we at Yunex did have a very focused eye on not only the data collection and storage and reporting, but also, you know, what's important for us internally. Exactly, you know, who's in part, what project is it related to, who's the beneficiary, you know, when the projects are completed, especially for the larger projects, but also for capacity tracking. So we rely on Marsh for quite a bit of the bonds that are issued on their perspective, but this is also aggregated within a system we had to build, approaching the carve out to aggregate this information also with our guarantee issuance. So for us, we had the advantage of, like I said, starting the facilities from scratch allowed us to see that foresight and take that step early. but also build tailored applications for our colleagues across the globe. We do have a lot of, like I said, decentralized operationally locally. We do have to rely on our colleagues, but setting thresholds on when global engagement is required, also setting thresholds with the broker team to engage us, and also on information data collecting. There's minimum internal and external information needed for bond issuance, and we take that and track it going forward, so we really can keep an eye on capacity usage for many reasons, not just, of course, regulatory reporting, but also for our own knowledge when business grows, when we need to revisit capacities or structures. All of its data is critical, so we did pay attention to that quite closely in our evolution over the past year.
I think that is very good insight. What we like all the three of you gave, but I think to reiterate a bit like on the role of the other financing parties as well. In that case, is like there were some questions coming in the chat where communication can clash between the banks and the sureties. I mean, like Peter was already elaborating on that one in terms of unsecured, secured, committed, how that communication comes across. And I think like it clashes a lot especially in those situations where change happens. So like Jenna, like sitting in the treasury department, I'm pretty sure like you were talking to your colleagues who were on top of the bank relationships even more than you were, and you were feeling a lot more pressure from that perspective as well, in terms of, because like there was a question on pricing as well. Because like as you said, I mean, like there is an imbalance sometimes, and that's what we experience as a surety as well, from the payment obligation versus the performance obligation, as well as uncommitted versus committed. And the abstract and the accessory character of bonds and guarantees, how you are involved in those things. And I think like one critical question came across here in terms of clashing communication is, and Peter, like that's why I would like to hint that question a lot more to you, is you were saying that the lenders who are funding liquidity in there, they are earlier at the desk or at the table than others. What's your thought on that one? Like how sureties can get better and easier to the table? Maybe it's a corporate question as well, because I have a similar case right now where a bank panel versus a surety panel is clashing in the restructuring. So it's like the corporate is then, as Phil and you were using the puzzle tiles, I think communication is so critical then, and data collection.
I think you're very right there. So maybe the first question you want to answer is, do you actually want to be at the table? Because if you are at the table, you're also part of the problem. And sometimes it's easier if other parties solve the problem. But there's one thing you need to know. So what is my risk? And what is the risk that I run? Not just on the issued sureties, but also on the unsecured part. And do I want to keep that open? Probably, well, you need a form of future surety as well. So whether you want a place at the table depends on the risk in the business case. And whether it is fully funded, whether there is sufficient headroom, what the execution risk of the plans are. So as such, you need a proper information base to actually understand whether you need to be at the table, whether you want to be at the table, and whether you want to continue. And whether that information base is there, whether that it's shared, whether you as an individual surety are able to fully digest all the information. That's for me is the biggest question. I do not have the answer to that, but what you typically see in processes, especially larger restructurings, is that there is typically a party, a independent third party, a consultant, who also writes the report. In our world, we call that an independent business review, IBR, which should help you understand more about the risks of the situation that you're in. And depending on that risk, my answer would be, I would try and get a place at the table. Whether you are informed at all is also something. To what extent are you close to the company that you understand what's going on there and properly understand what's going on there? So I think there's a responsibility for the company as well as for the surety provider, and to properly understand what is happening at the company. Typically, you can see what industries are in a more difficult position, and that also depends country by country, and understand where the risks are. So I would definitely also, on that basis, properly try to understand the parties who are involved, that you have a good view on those companies. Philip, anything you would like to add to that?
No, I think, there can be some dynamic tension, right, between the banks and the sureties, because there's only so much, if you're getting into those sticky situations, if it's an insolvency, restructuring, those sorts of things, it can be a bit adversarial. I guess a lot of it depends on everybody's objectives coming out the other side. And, surety plays a really important role. We see this a lot when we're structuring deals, right? There may be negative pledge wordings within bank facility documents, but the banks, in the vast majority of cases, will understand that surety plays an important role in supporting the business and making the overall company stronger. So their ability to work with and accept sureties as, having a place at the table, I think is an important thing. And if you started from that foundation to begin with, I think when you get into those difficult situations, as you and Nils talked about, I think you're in a better position at that point, because you will have already laid the foundation for that.
Yep.
Well, there was another question which fits very well to Yunex situation, dealing with public entities and, fairly regulated and required to put down bonds or guarantees in general. And there was a question of, how do you, it was more in terms of free market, the question, but I think how do you feel pushed into a direction that you need to put down the bond? And what, the other question I would put on top of it is more, as you already elaborated and said, preparation is all, having your data sorted and your capacity ready. Thinking in terms of government intervention and free market, how do you feel at Yunex in terms of how much capacity I need, because the government and public entities require that? So, or how do you think about free market in general? And I would love to hear Phil's view on that one as well.
Happy to.
Yeah, I think from our perspective, we're comfortable in the business we're in, and we understand this is part of being successful for Yunex and our offerings globally, from a product perspective. So, when you enter a certain jurisdiction, when you look to bid for very large infrastructure projects, this is a part of it, and something that's already considered, as we are quite mature, and especially in a number of countries where sureties and bonding is kind of the lead performance type guarantee. So for us, it's not necessarily a point of tension, but rather, to ensure we're prepared. And that's something we had to focus on specifically, and had a little bit of a trial by fire right after closing, where we were presented with a rather large opportunity, and we as Yunex were ready and prepared, and but from a bonding capacity standpoint, it was quite early, and despite the challenges, we still were able to get it done. So generally, we try to balance the two, because such extreme opportunities don't come across every single day or every single year, much less. But having the balance of, working capacity, but also responsive capacity when larger opportunities come up in certain jurisdictions where sureties and bonding is required from our perspective. But I generally, it's part of the business we're in. And yeah, and you choose to accept that depending on the country, of course. But yeah.
And I think like all of us know, and I think ICISA posted once the timeline of surety, how long it goes back. It goes even before Christ. So like, as there is a handshake, I mean, like there can be a surety that there's somebody who's proving like that contract or that agreement has been closed. So there's already a third party then, confirming, okay, like I've seen that they have agreed on something, and I will step in if something goes wrong. So it happens in all good families. So
it does. Nils, maybe if you don't mind, if I'm first of all, I'm a free market capitalist at heart. So I do believe competition is good and all those things. It's a bit different, right? Having the U.S. perspective, where I spent a lot of my career here in Europe, and if you just took performance bonds for public works, right, just as a simple concept, and if you have a 10% financial instrument here in Europe that could either be done by a bank guarantee or letter of credit, or a surety guarantee issued by an insurance company, as long as the wordings are similar or identical, and they respond the same way, and the issuer meets certain criteria, and both are regulated, whether it be the insurance regulations, financial regulations, they're both in highly regulated industries, then that's a like for kind trade out, and they respond the same way, and the track record is very good in terms of claims payout. Then you go to somewhere like the United States, where the structure is very different, Canada included, and some other parts of the world, where it's really a true performance guarantee. And if you took that same project to build a bridge in Belgium or in Florida, the requirements are very, very different, because in Florida, they're expecting a completed project. If that contractor defaults, the surety has to step in and figure out a way with the project owner to get that job completed. That might mean funding the contractor that was originally hired and bonded, if it's a liquidity issue that just needs to be worked through. If another contractor has to be brought in, the project owner and or the surety can help run that process to bring in a substitute contractor. But either way, that bond is there at 100% of the contract value, not 10% of the contract value, to make sure that project is completed. So fundamentally, it's very different. And in the United States, sureties enjoy a preferred position when it comes to being the issuers of those guarantees, but that's because they're set up and equipped to respond to those default situations. Banks aren't going to step into those situations and have the same ability to navigate through, work through those situations and deliver a completed project. They're used to basically wiring money. If there's a problem, they have an obligation, they wire the money, and that's the end of the story. So it's really apples and pears, apples and oranges. So you have to look at it that way.
And that is a good summary of it. I think, like, especially from a surety perspective as well, like collecting the right data from the client and the communication with the client in terms of assessing the risk correctly on the different levels, whether it is on the bond level, as we were discussing on the different bonds, and the the project risk itself, whether it is just payment obligation or it's a performance obligation as well. I think like the ability of a client or an account to perform that contract, whether you need to pay out or just like step in and to perform and to end or complete the project. Those are parts of the risk assessment, rather than just only looking at a rating or a scoring. And I think the elementary is the communication back and forth, project controlling, like Peter, you were saying earlier as well, and IBR, whether it is in the restructuring case or even in the carve-out case, because like it's a snapshot of the capabilities of a company where bonds and guarantees are issued. And I think data collection as well as data sourcing these days, especially through COVID, was really critical. And I think I learned us a lot how critical it can be, and like it can be dangerous as well, as we see that as well. But nevertheless, I think all overall, it is an element, to get very much close to each of the parties and to coordinate the right dots between the people. So people, whether like they come from a bank, from a broker, and I think like using facilitators, I think that is one of the sum ups and takeaways from this call. I think like certainly to get a unique selling point like that, they're like to calm down and to balance a bit more the, how do you say, like the information asymmetries, like which come across a lot when people deal with each other. Because like then, as we were saying, like coming late to the party, like you have missed the party maybe, and that was more the picture, and like sitting at the table first, yes or no, because like sometimes like the deal is done. And I think those ones is so critical, and like to lead the conversation and to help and sometimes mirror maybe the situation of companies, or even just in a project, saying, okay, listen, lean back, look at it. Can I take that risk? Yes or no? And I'm speaking, I think like speaking for the whole panel here, saying because like each of us are taking the different risk from that perspective, and like advise or even take a decision and going through that.
Nils, I fully agree with that, right? So there's a risk at project level, but there's also the risk at company level. So I've seen situations whereby the risk at project level, well, it is what it is, but going forward, actually, there was a loss share in place between some of the surety providers in order to continue issuing certain sureties, because nobody wanted to enter in certain projects, but for the continuity of the company, this was important. So very much is about balancing the risk and short term, longer term, and not just project risk, but also the company risk. So fully echo that.
There's an interesting question came across the chat, and I think like while Phil was talking about the US and the completion guarantees, or let's say like the performance obligation behind that, and if Europe is developing in that case, and I think we have seen that in a couple of distress cases where a European country, and then it comes in across as well, the government is imposing new rules in that one. And I'm leaning towards the Carillion case in the UK, where the UK wants to implement the Canadian model, which is the Ontario model, which is very close to that, like to the question and comment which came across here, saying that beneficiaries ask for the whole completion of a project. And I think, I would love to just hint briefly to an analysis EY did for a partner association, the SFAA, the Surety and Fidelity Association of America. So they did an analysis how important sureties are, and like doing somehow, even there are not, as like Peter, you were saying, in terms of securing and fully funding, but how much they finance and support projects to be completed.
Yeah.
So the question is really that, do we see a trend that Europe develops in that direction, yes or no? I'm looking at like Phil, but like maybe Jenna or Peter wants to answer that as well.
I'll tender to you
I'm
guys.
happy
It's a
to.
great question. Yeah.
No, I mean, I think it's possible, but I think, right, you would have to change all the regulations, and the discussions going on in the UK, as I understand it, right? I mean, you really have to rework the way that bonds are regulated. And if you're dealing with commercial counterparties that aren't subject, to the same rules around that as public works, you're talking about two different things. So I do think if you are a sophisticated project owner and you want to hire a contractor to come build you a factory or something, and that's purely a commercial to commercial sort of enterprise, I think that, I think companies might be wise to consider a more of a completion, guarantee And again, it's really how you title it is almost irrelevant. It's a performance bond, it's a completion bond. It's really the remedy, right? It's what the surety's obligation is in the event of a default. That's really what we're talking about here. So I think that there could be an opportunity there first because it's an easier path when you're talking about, various countries throughout the EU and UK, Ireland, to try and figure out whether or not they want to reconfigure the way that guarantees are required for public works. That's a lot longer process. I think there's some validity to at least having a discussion around it. I think the results in the US and Canada would bear out that it's a good model, but it's really up for the regulators to decide that.
Yeah, and I think like what you see is, and I think like the very much challenge is what we have seen of the makeup projects, or even like smaller projects, that those tendering authorities need to define like the scope of works, who they want to see there, and how they like what type of guarantees they would like to see. So any like maybe like you want to get some final comments how you before we close out, and let's have Richard have closing words as well from ICISA. What's your biggest takeaway out of this this discussion, as well as like how do you want to distribute surety in the future or deal with
Jenna,
that?
Jenna, do you want to start as the client?
Absolutely. I think for us, kind of going back to what's the role of the broker, where are they playing? The strategic role for us as a growing company is going to be essential. We, have the broker not just transactionally issuing bonds, of course that's essential, but really looking at us and the way we grow to mold the programs, the facilities with us, and to bring new ideas and new opportunities, of course, and efficiencies on the way things are structured as we change in the future. So really expecting and challenging the broker on the strategic engagement level is crucial in this engagement for us. Yeah, as Philip knows.
Absolutely, we're up for it. No, that's great, Jenna. That dovetails really well into my view. Also, again, it's our job, as I said before, to be your eyes and ears, to know you really well, to know not just where you are today, but where you're going. What are your opportunities? What are your challenges? Whether that's geographic expansion or, clients sometimes get into litigation matters. There's challenges that arise, regulatory changes, and for us to, sit down across the table from you and know what you're dealing with, know where you want to go, and bringing you ideas and solutions. It's never to me about pushing product. It's always about here's what's available. Let's see if there's a tailored solution that the surety market can bring to you, and then us having the discussions with the markets and saying, great, we've got a great client here. How do we help them solve this problem? How do we enable their business?
Yeah, maybe from my side, a last comment. I hope that I've brought across that having a proper information base is very important, and this is not just on the individual sureties, but also on the company. And in some instance, I would definitely ask for a more independent view, so the independent business review that we talked about, in order to make the right decisions with the right risks.
I just close out. It's a people business. That's why like faults and mistakes happen, but communication is key. And hand it over to Richard for closing words.
Well, thanks very much to the panel, Nils, you for moderating it, and Philip, Peter, and Jenna for their interesting contributions, and particularly Jenna, because as ICISA, we are the Association of Credit Insurers and Sureties. What we live on are the clients. And Jenna, thank you very much. The bridge between that client and us is you, Philip, the broker. And when things go wrong, that's when the product actually proves its worth. And that's what Peter represented today. Now, the very first question that was asked from the audience is, what is the USP of surety? And I think that's a fantastic bridge to this afternoon's session. So at 4 CET, 10 Eastern Time, we are going to bring to you Lee Covington, the President and CEO of the Surety and Fidelity Association of America. And they have sponsored research by Ernst & Young, by EY, to look what is the value of surety, what is its USP. So I heartily invite you to have a look and to actively participate like you have today in that session this afternoon. As always, links to the recordings of these sessions will be published on Thursday afternoon or Friday, so we can all watch this again, and more importantly, show it to your colleagues, show it to the people who might be interested, because we want to get maximum amount of exposure for our product. Bless you, Peter. And with that, again, thank you to this panel, and we hope to see you this afternoon. Thanks all.
Thanks, everyone.
Thank you.
Thank you.
Thanks.
Bye.